Can you actually buy a multi-million dollar business for just $1? Is that really possible? Hi, I'm Jaryd Krause. I'm the host of the Buying Online Businesses podcast, and today I'm speaking with Marc Roca, who is a seven-figure seller with 8 years experience in acquiring businesses, and he founded the third ever Amazon aggregator, founded and has acquired over 30 brands to date. Now, in this podcast episode, Marc and I talk about when he got started, why he got started, and how he started buying e-commerce businesses and brands for Amazon, or the Amazon businesses. We talk about the 30 businesses he's bought over those 8 years. We talk about how he structures these deals. We talk about how he finances them. We talk about how he pays his investors in terms of family and friends who invest with him. We talk about businesses that he's lost and failed on, the lessons he's learned and how he's had to shut them down. We also talk about the businesses that have done okay and then some of the businesses done really well. We talk about his top 3 lessons for any acquisition entrepreneur. And we also discuss his 25-year vision, one of which includes the business that he bought for $1, which is a $5 million revenue business, which was around 700K SDE, I think it was. And then we share some wise words we've both learned along the way of us both acquiring businesses and being entrepreneurs. Now, there's so much value in this podcast episode. If you're looking to acquire a business, make sure you listen to this one. It's another level of how to acquire larger acquisitions with financing, deal structures, and how you can buy businesses for less money. And also if you've got a high risk appetite. Now, we do talk about buying businesses here, so make sure if you haven't already got my due diligence framework, go away and get it free. It's what I use and all my clients use to help buy businesses, make it so much easier. It's made people millions of dollars and saved people millions of dollars. So you can get that at buyingonlinebusinesses.com/free resources. Now let's dive in. Do you have a website you might want to sell either now or in the future? We have a hungry list of cashed up and trained up buyers that want to buy your content website. If you have a site making over $300 per month and want to sell it, head to buyingonlinebusinesses.co/sell your business or email us at info@buyingonlinebusinesses.com because we will likely have a buyer. Details are in the description. Marc, welcome to the podcast. Thanks for coming on.
Thank you. Thank you for inviting me. Early morning for us.
Yes, early morning. Well, mid-morning for me. Or actually, you're the same time, Philippine time, right?
Yeah, 10
10 a.m.
a.m.
Yeah.
So you're in Perth?
No, I'm in Indonesia. I'm in Bali. It's the same time. But
Okay. Yeah, same
I've been
time
awake
zone.
since 5 o'clock. I got
Yeah.
my
Me too, 6 a.m.
yeah, got my early surf in. So, um, when did you start buying businesses, and why did you start buying businesses?
So the story is my business partner wanted to find a wife. So we went to the Philippines for summer and we were poker players. And one of the friends in Cebu, he started Amazon and he literally said over dinner, why don't you come to my house and, look at Helium 10 and check the data, and then you'll see if you wanna, do e-commerce. So 1 week after, I met with Joe Magnotti in Manila, and then he said, "Why don't you buy a business?" So the next day, I went and looked at something that was $65,000. It was a babe bag made in China. And we closed the acquisition when I was in Canton Fair. So the next day, I went to see the supplier. My first time in China. And yeah, that worked out well. We just fixed some keywords and we sold it for 125,000 a year later. Took some profits along the way.
Congrats. So you
And yeah, that
basically doubled that
kickstarted
one. You
everything.
doubled that one in a year. Yeah.
Yeah, we doubled that one. We were kind of lucky. I raised the price and then, just did some PPC and got lower cost of goods because I had a nice dinner and drinks with the supplier. Um, that's like one of the main things, just good relationship with suppliers. And yeah, after that, we said, why don't we buy more? And we had the idea to roll them up from the second buyer. As the second seller, we bought a business doing around $10,000 SD. We bought it for 240,000.
For how much?
And
240.
guy,
So 2 year
Mhm.
multiple.
Yeah, 2 year, like back in the
Yeah.
day, that's
Yeah.
2018.
Oh, so you bought this first
And
one
the
in
sell,
2018, right? And just for
yeah,
people
yeah,
listening, you mentioned
2018.
Joe Magnotti. He's the for people who don't know, that's his co-founder of Empire Flippers, and I just interviewed Justin as well, who's the second co-founder as well. So yeah, what they don't actually, haven't really spoke this about this much. Was in one of early podcasts of theirs many years ago. I applied for a job in 2016 to work with Empire Flippers, and I didn't get the job. It was either, I think it was I think because I wasn't able to acquire businesses while still working for Empire Flippers, and I was like, oh, I don't know if that. I said my intention is to do this. Is there any way we can do it? And Justin and Joe is still like, damn, should have hired you anyway.
Well, it's a
But
cycle,
who
right?
knows like, what
With
could
there
happen?
were the good times and the bad times, and now I've been focused on the bad times, which is good for me.
Yeah,
I will get to that.
I agree. People freak out right through the hard times, and I think it's really the best because while people are freaking out, you can get to work, and it's this massive opportunity where people are too scared to do anything, and it's what Warren Buffett says, right? Is invest when there's blood in the streets, and yeah, it's an interesting time right now, time of recording as well in terms of acquisitions, and I think it's personally a great time to be in this game.
Yeah, right now it's about lowering your downside, and not many deals get done because there's a difference in what people perceive as risk, and we can talk about that. After 30 acquisitions, I think we kind of understand the risk, and we still made some mistakes last year. And there's another guy in Hong Kong buying businesses, Roman, and he also said he made a big mistake last year. So even the best, we're all making mistakes and learning, right? We're still pretty young. Um, it's not an easy industry, but it has opportunity.
I mean, we're only human, right? We're going to continue to make mistakes until we, for the rest of our lives, as long as we're learning from them. And it depends on what stage of the journey what type of mistakes can you afford to make, I guess. And when do you decide to start being less aggressive in your approach towards your investment strategy, depending on where you're at financially and your goals and lifestyle situation. So, 2018, you've done 30 acquisitions since then. First two sounds like they were content sites. Where did you?
No, it was Amazon
Oh,
FBA.
Amazon FBA. Okay, all right. So you did start with ecom. Okay. And so do you bought that e-commerce business because one of your friends started an e-commerce business, and is that because you understood it a little bit more?
Yeah, like he had started it in 2016, and then by 2018 he was already doing 5 million revenue, fitness and accessories. And he's a smart guy. I met him in 2011. We spent the summer in Cebu. Everyone was playing poker. Now everyone was doing Amazon. So if the smart people do something that you're not doing, um, just copy them. And all of us had different. Some people just wanted cash flow to have a family. Some people want a bigger business. Some people want lifestyle. Some of them sold to the aggregators. It's so after that we got the idea from the second seller to. He literally said over drinks. He came to Manila. He was from New Zealand, and he said, "Why don't you guys buy some companies at 2-3x and then sell it to an old public company at 10x?" And that kick started the whole thing. And we met with the first employee of Trasho, Stephanie, which is now the CEO. Well, will be the CEO soon. Uh, in Bangkok on Dynamite Circle and DCBKK. They had raised 7 million, and we just had raised like 2 million. And yeah, well, we didn't know anything about M&A. We didn't know anything about like that. We didn't know. It was like me and my business partner, another poker player, trying to get good returns on our money and building a team. And like we had never hired anyone, and so yeah, that evolved over a few years, and then eventually I got bought out from that, and then I went into content.
And then you went into content
Yeah.
businesses, acquiring content businesses. And why did you shift from that to content?
So my whole idea was that on my thesis back in 2020, early 2020, that PPC would get more expensive and the margins would get squeezed because everyone was coming into it. So driving content into the Amazon listings, like buying some affiliate sites. I saw a case study also on Empire Flippers. A guy was selling like a whetstone, but he had first an affiliate website for whetstone, and he was making $5,000 a month. And then he launched like a premium whetstone, which was $80, and like a grinding whetstone. Yeah, for like the knives sharpening stone, let's call it. And he started making 50 grand a month profit. So that was very appealing. But my business partner just wanted us to focus on Amazon. And I said, okay, I want to do like one business unit Amazon, one business unit content, and then you merge them together. And almost everyone has tried to do this. Trasho tried to do it. Yeah, that was a disaster because we raised a little bit over 1 million. We deployed the capital, and then the biggest content update hit in December 2020, which was the one that for the first time Google said we do not like gateway
Yep.
websites.
Gateway pages. Gateway pages,
Um,
right?
gateway pages, yeah, and yeah, like we lost 70% of the revenue, and over 2 3 years we've tried to recover it, but in the end, like this year, we decided to shut it down because this year has even been worse
Yeah.
than the
In
2020.
2024, it's been very interesting. Well, end of 2023, and then also March 2024 is pretty interesting with how Google has, and I've had to change. They've changed a bunch of things, and I've got a bunch of guests on talking about that. And Google's just really struggling themselves. They kind of have to make some changes. So that aside, I want to ask you, what happened then when you raised a mill in capital and it didn't go so well with that deal? What happened with the partners? Like, do you have agreements put in place with like capital deployment and then the return, and how does that work?
Well, usually I am the biggest investor, right? And then we always try to raise money from people that this was maybe like 1 or 2% of their net worth maximum. Because yeah, so it's like high risk. Like someone invests 50,000, they're worth like 5 to 10 million, right? You don't want to take the hard-earned savings into this, online business because it's an alternative asset. Half of the people got bought out, and then half of the people still believe that we could turn it around. And then the people that got bought out in the middle, like they made some extra cash back than the people that believed in me, and but yeah, we take calculated risks, and there's things that are out of our control, and the risk analysis is always kind of downplayed from the broker's perspective and the sellers.
Yes, it is. It's definitely is, isn't
um
it?
yeah, I mean, recently I heard from someone that had like gotten more than a $1 million SBA loan on a content site in like last year, and now that's worth zero. So yeah, that's a big problem, right? Because the loan is personally guaranteed. And then the banks, it was involved. We'll get to that on the turnaround stuff, but the banks are not lending anymore, and if there's no lending, the multiples are low, and the banks are not there to lose money, right? So that means there's more risk. If no one wants to lend money to you, that means the risk must be very high.
Absolutely. Absolutely. This is the whole reason that I have a job, is because we've got people selling businesses, online businesses, and brokers um, that are selling them like it's easy business to run, and there's not much risk. It's huge potential and upside. Whereas that's where people get caught out. And I've heard so many stories where people are like, "Oh, damn, Jaryd, I bought a business, and I found out about you, what you do after I bought this business." I've even had one person come on the podcast that was brave enough to share their story of one of their experiences, and it's just a shame. It's easy to get fooled in this game if you don't have good people on your side, having a look at the deals. So when you're doing due diligence, you've obviously got other people that look at the deals and overlook what you've done in DD.
We've done it internally, and then I send it to some friends. Like the deals we've done, they haven't been big enough to involve. Like we understand the risk. Um, Mostly we see an opportunity to grow it. Like what we bought, for example, 2019, 2020. We grew it up to, with $2 million, we grew up to almost 1.5 million EBITDA. And then I was told my partner, let's just sell one of the brands to the aggregators, right, for 4 million, get the money back, give the money back to our families, because I mean, I got a loan from my family. Like, you get like 100K, and then, it's working, you sell a house to buy more. Um, and he didn't, took too long. Like I told them, let's sell it in November 2020. And by the time they listed it in April 2021, it was already, it wasn't the time anymore. So I had been bought out from the first aggregator around, I think, July 1st, 2020, because I wanted to be more aggressive, and my business partner just wanted to, keep going. and it declined. Everything declined. Like 2023, I bought at maybe 20% of my valuation, like my partner out. So like 5 times less than they bought me out. So miss, yeah, in the Amazon aggregator that it's called Alpha Rock, and now it's folded, right? Like we just sold some of the brands, and so really, because no one was running product, right? Like e-commerce is all about product, new customer acquisition, and his strategy was to just let's keep going like the same it's been. And yeah, well, that didn't work out.
No, not at all. There's a season for everything in life and business, and if you can get in and get the season right at the right time, you look like a pro. But it's hard to get it right. It really is. So
It's luck. There's a lot of luck
there
involved.
is, and I don't think many entrepreneurs talk about luck enough. Sometimes you just get a break. Like I had one client who bought a business in the chess space, and the Queen's Gambit came out in on Netflix, and after that, his income just went insane with his business because there was so much more organic traffic happening around chess because so many people got into chess because of Queen's Gambit. And how can you predict something like that? There's absolute luck in that success. Also, skill buying buying good business. If it didn't happen that way, it still would have been a decent business. But um, there's definitely that component to it.
Yeah, for me, I think my lucky moment was when my business partner said, "Hey, I wanna go to Philippines again and find a wife." And because I was just back in school, I didn't know what to do with my life. Right? You play poker. If you don't play, you don't earn. So with online business, if you can hire, yeah, even a simple business with one or two BAs, you get a lot of your time back. If you're not, if you don't want more than $100,000 a month in like salary, you can do 10, 15,000. It pretty, over a few years, like that's not a bad goal. And then meeting a lot of people and getting lucky and just asking a lot of questions. Like I feel people don't ask enough questions. Like you can go on Twitter or X and message people and they'll answer. Like people with $50 million businesses, $100 million businesses. That's also one of my recommendations. Someone reach out. I sometimes post in a mastermind and you have 15 people reaching out and I just answer some questions. That's okay. We have time.
I love that recommendation. Having a curious mind. I've always been told that I'm a curious person. It's really a beneficial thing to have if you're trying to grow in any area. Be curious about certain things. So you said that was one of the recommendation you have for people is ask a lot of questions. Now, from the 30 acquisitions you've done, what are maybe the top 2 to 3 things that you would share with people that are looking to buy a business for their first time or acquire an online business for their first time?
First, whenever they say the founder is not working on the business, that's bullshit. Um, in my opinion, to replace a founder is $300,000 a year, 100,000 something. I would say almost any business. Okay. And I'll explain my theory is you can hire someone very smart for like 100,000, um, but then you might have another 200,000 in headache. This person quits if he steals, if you don't know how the business works. That's why private equity or more sophisticated investors, they only buy things over a million EBITDA because the business will be more stable. um, so it really, when you're buying an online business, it has to be that you are the strategic acquirer because you have some kind of knowledge about that industry, about those products, about or that the seller is just really like disconnected from the business and they really don't care anymore. And there's a lot of those, right? Like people are burned out after 8 years. And then that's not then the cost is not 300,000, right? Because then you can grow the company 50% in the first year, and you know and then you get more excited, right? And then it's easier to hire someone because it's growing. But just buy to hold, I think it's a mistake.
I agree. Buying to hold is a massive mistake unless you're buying, something say over a mil, and you've got people in place that have maybe some level of, instead of paying them just a wage, like you mentioned, have some stake or equity in the business as it grows. So you've got some incentive there. And I would say the incentive should increase as time goes on, to make sure they're going to build a business as best as they can without you having to have too much time spent on it or worry or stress. That's a really good one. What else have you got for us for first time buyers?
Well, I wouldn't buy. I would partner with someone that wants to sell, but they don't want to grow the business anymore. And I'll give an example. There's someone that has a 15-year-old business that they're like an e-commerce enabler in China, and they do more than 200 million in revenue. And he is making 5 to 10 million EBITDA a year to himself, right? He doesn't want to grow the business anymore. He doesn't even have a sales staff. So why don't you reach out to someone like that, and then you kind of white label what they're doing for your own business, right? Or join someone that has like a 1-2 million revenue business, and they really don't want to do it, and you say, okay, if I grow it with you, you know, grow 50% of the growth is mine. That's a way for first-time buyers to really lower the risk. Like, hell, I have like 20 brands that 10 of them are just not doing anything because we don't even have someone that wants to think about it, right? Because it's too small, it's just sitting there. That's one of the, I would say that. And then you get so much experience, right? Because you only get experience on this if you kind of buy it. You're not buying it, it's like you act like the new owner. So you need to be given free reign to do what you want to do within, and the old owner will tell you, oh, maybe this is good, maybe this is bad, but that's the only experience. And then you go and then you have some experience and then you buy something for yourself.
Yeah. So start with earn in, is what I would call it. Earn your way into a business, get the experience. Yeah, I like that. I like that idea. You'd want to find a real. I think that would be pretty tough to find a good match for me to have a business. I'm not discrediting it at all, because I think it's a really good way to go. But if I wanted to not have to run my business anymore, I'd need to find somebody that I really liked and I could back to earn their way into my business. Um,
Yeah, it's not
that'd,
easy. I've known several people from Dynamite Circle that done that and then they ended up buying the
yeah,
business. Like Tommy Joyner, he ended up buying Word Agents, for example, after helping it grow.
I think they are also some of the best acquisitions when you've got a worker who's just working in the business, and the business owner gets to a certain time in their life or cycle in their business where, like, this isn't for me anymore, and they see the person that's performing best as an employee in the role, one of the roles, and say, hey, like, how would you like to take this over, earn your way in? I've seen that on offline businesses a lot.
And I think the third one, if you're buying something, just buy something like don't pay 3x, pay 1x, right? Because then your risk, at least, even if it goes belly up, you at least get your half your money back over the first year.
Shorten your
So in
risk
a
time
way,
frame is a
it's less
really
painful.
good one. I like that.
Yeah.
Yeah, yeah.
That's what we've been doing now.
And you're buying ecom businesses now, or content? Yeah.
Yeah.
So there's one that you just
Ecom.
mentioned
So
before we hit the podcast. Tell us about that. I think you bought it for $1, and it was a five
yeah,
million EBITDA. Is that right?
5 million
5 million
revenue,
revenue.
700,000. Yeah, 700,000 SD.
So
It's a
$5 million
portfolio of
revenue
brands.
per year business, and you bought it for $1. Okay,
Yeah.
we need to. Everybody is so curious, especially me.
Yeah, well, let's get to the
Yeah,
background. So someone told me in 2021, go on Twitter, just follow people. And I did that. And then I found out that there was these two guys called Fundy and MethUp, that they were, buying distressed businesses. So, there's too much debt, and then, the founders don't have incentives. And so I started studying those things. I was lucky also, my wife went to INSEAD MBA. So I went to France and I went to Singapore and then Wharton. So I got like the MBA experience without having to go to class while still working on my business. But I got to meet like the people from private equity, the professor that turned around Dr. Martins in like the 90s in London. And I said, hey, this seems very interesting because it's very niche, right? The niche in the riches in the niches. So I just created a company called Inversal that was all about buying businesses from the lenders, or you don't want to deal with it anymore and you want to be out in a month, and then that's it, right? Like, you sell it to me, will not pay you much, but you'll be out, right? And a lot of e-commerce owners, after many years, it's not even about getting a payout, it's about having peace of mind, right? So then I went out and I started cold messaging on LinkedIn, like lenders. Back in the day it was Clearco, some others. And one reached out and said, "Hey, we have this situation of this business in New York, doing like 3-4 million revenue. Wanna you wanna buy it?" I said, "Yeah, okay." I looked into it. That was a disaster, so we lost all the money there. So that was the first deal. Yeah, we bought it, and then it was just a complicated business model. I didn't think enough about, there was a key vendor. um, yeah, that you lose the vendor, you lose the business, so that's kind of what happened. And also we mismanaged it a little bit. Yeah, it's we overpaid for it. That was also a reason I decided to shut it down, because even with a 5-year forecast we wouldn't see money in, and there were other
So
deals.
when you say you
So that's the
So when
background.
you're saying you're outreaching to all of these lenders, what sort of lenders are you talking about? People that are financing businesses.
Yeah, like sellers
Uh huh.
finance.
Okay.
So all those lenders, they sit on top of the equity. So you have equity, which is the shareholders, and then the lenders, right? And if the business goes belly up, the shareholders lose everything, and then you liquidate the business, and the lender gets paid. So the lender owns the business in principle, even though to really own it, you need to go through a process. But usually there's an agreement, because any process is at least $500,000 in lawyers. So most people just you just have a handshake deal and some documents. And so yeah, that's the background on how we got to this point. So that was 2022 October when we did the first deal. And through this, someone reached out. There's a group of like CEOs on e-commerce. Someone else reached out that they had this apparel brand, which is still not the good one, right? We're getting the one where we lost a lot, the one that's doing good, and then we have the amazing, right? It's like it's been a cycle of 2 years. So they reached out. It was a business selling like pajamas on Amazon. 9 million revenue the previous year, 900,000 SDE, and we ended up paying $500,000 for that one. And the seller gave us 1.4 million in inventory on consignment. But the inventory was, we knew we'd lose some money on the inventory, right? So the real acquisition price, you can call it 750K, which is still really good, right? It's like less than 1x SDE, and it's not too complicated to run. Um, so that one we're still cleaning up 15 months later. It's not it's not as people believe that you buy something and just expect the first 6 months of nothing to happen, because it takes time. It takes like 2 quarters just to get the buy-in from the, if you hire new people or the suppliers, or you want to make a change. It's a product business, right? It takes time.
Yeah. Are you finding you know when I think about this in terms of risk and in each of the businesses, are you finding, like, it sounds like these businesses that have reached out to you are kind of not fully distressed but have some level of distress, which can equal, like, there's too much on their plate for them wanting to deal with, and that could equal more risk as an acquire, which is why you are buying it for a lesser multiple than say 2 to 3. Uh, are you finding that's the case compared to some businesses that are listed on marketplaces and with brokers, like having a little bit more risk in those ones?
Yeah, I mean, if it's growing 2 to 3x is good, right? But if it's not growing, you cannot pay more than 1.5x. And if it's declining, I think 1x is a good price because you're still buying their assets, right? If they have heavy assets on inventory, that's still money that in this case he's selling in the business for 500,000. But if he shuts it down, what's he gonna do with 1.4 million of pajamas and socks, right? It's like so in this case he's getting about like 2 million out, even if it takes him 2 years. Then and after we closed, like he said, hey, can you send 22 trucks from Chicago to your warehouse because I'm defaulting on my rental, so they're gonna shut down and keep all the stock inside in 30 days. So that's part of the fun, right? Like that was like what we didn't know, right? So that's why you also
Yeah.
don't pay so
And
much.
are you preferring to purchase these assets with a little bit more risk or a little bit more work to sort of turn it around for a lesser price than buy something that's a higher multiple and less risk? Is that sort of your acquisition profile at the moment?
Yeah, that's my acquisition profile. I feel there is less risk for me because we have a team in China, we have a team in Shenzhen. So in this acquisition, I knew we could better the cost of goods, and he was buying from the guy was from Chicago, very successful. Over time, he sold over $50 million in revenue. He's been in e-commerce for many years, and then he had sold the other business to an aggregator. Like he had 2 or 3 businesses. Um, so in this case, we knew he was buying from a sourcing agent in Hong Kong and paying 14% more of the cost of goods. What we didn't know is the sourcing agent was buying from another sourcing agent in Ningbo, which was paying another 15%. So we were able to lower the cost of goods by 40%, like on the next pre-order. Um, yeah, and our sourcing team in China, like 10 years in clothing, in apparel, so they know what they're doing, right? So to me, there's a lot less risk, and we're limited by capital, right? We never raise money. It's like all family funded, like reinvesting. Um, and that's where we will get, like when people have raised this extra money and they have this growth, you know, growth forecasts for their own business to raise another round, which is, it's done. They waste money, like the money is growing from the trees. You know what our grandmas would say: the money doesn't grow on trees. Well, if you raise VC money, that was your tree. Um,
Yeah. Yeah. So how did you get to this this is it 5 million revenue
yeah,
business for $1 acquisition for $1?
yeah. So this was a deal that we didn't want to do. I was actually forbidden by my partners and my wife to buy anything else because we were already October, right? Like we had invested $1 million in pajamas for this brand. It's mostly like winter, and then everything else, like it was several teams. Like I've been finally able to merge everything into just one company, and we just did it in March. That's why I got some of my time back. We're still integrating this quarter, so it's finally you know. So I just said that I was doing this turnaround, and then the CEO, the founder, reached out and he said, "Hey, we're looking to sell." And I was like, "Okay, this is like no start of November 2023." And he says, "Well, we need to sell before Christmas." And I'm like, "Okay, that's quite tight, right? Like it's only like 30 days. How much do you want to sell for?" And he came back with like a 1.5 million valuation. He said, "Well, we bought all these for 3 million. So around like 1 million in inventory and 2 million for the business is like one, two Shopify mainly brands." And this was a complicated deal because it has a German, like two of the brands are German, one Amazon brand that's Germany, and then there was a bonus brand that we didn't get told until we closed. There's like whatever, just take this brand, and I'll get to that one because we're selling that brand now. We're gonna list on Empire Flippers. Um, so that's November 14, and I didn't want to do the deal. I'm forbidden to do the deal. So it was pajamas. So I looked into it, right? Oh, we're selling pajamas. Oh, this is like pajama brand for older ladies, right? It's like, and that was the demographic. I told my team, hey, if we ever buy anything else, it has to be like older demographic, Gen X, Boomer, Millennials. Like in 10 years, it will be us, right? We'll be old. So I go back and I tell them, look, like we don't have money. This is November. You say you have a $1 million offer for February. Just sell it to them. And then he's like, oh, but we really want to close before end of year. Or investors, they had raised 18 million. half debt, half equity.
The business itself had raised
Yeah,
18 million in
they
size.
were busy backed, and they were trying to do like an e-commerce and SaaS play.
Yeah. Hmm.
You know, they raised the money at. They were the one of the last to raise money before there was no more money. So they had been running this for almost 2 years now and burning like the money. So my father-in-law always said, never say no to a deal. That's I think one of the key takeaways from people in the podcast can be never say no to a deal, never say no to a proposal. Just give what will make you very happy, and then reason why. So I told him, look, I can only pay $1 for this, and I'll buy the inventory. Right, there was 700,000 in inventory. Um, and my reason is that you have three Shopify businesses, and 700,000 SDE, and to run every Shopify business is like 200,000 in salaries, right? The agency, and they were using an agency paying 25K a month, another agency 10K a month. So I make no money from this, unless I really cut everything. Like we're gonna make no money, and you need to close in 30 days. And if we close, there's no more Christmas for my executive team because my staff has Christmas. They will. We cannot tell staff no Christmas. We need to transition everything from only in 1 week, right? End of the year. So they go back to their board and they accept. And I'm like, well, shit. Now we need to do it. And we didn't have the money for the inventory because all our money was. So I pushed the payment of the inventory to January and February. But then there was another complication, which was a lender that was owed 1.5 million. So the lender was able to take the inventory and sell it, or take the cash that they still had in their mother company, which was a few hundred thousand, and kind of made them whole. Um, so I meet with the lender. There's like a $3 billion fund in Israel, and the first thing they say is, "Who are you?" Like, we only work with VC-backed companies. I'm like, "Well, I'm the guy buying the VC-backed companies." It took them like 2 weeks of due diligence to accept. And the first idea was they transfer the loan to us, like part of it, like a million or something, right? So we have it's back, asked back, right? Like we sell the inventory, we pay them.
Yeah.
And then they came up and they asked,
So you would buy inventory for the business first, sell it, and then you pay off the loan.
yes, exactly,
Yeah. Yeah.
exactly. That would,
Just so people, I'm
um,
just repeating that a little bit so
yeah,
people listening can follow. Yeah.
yeah. So we have the 700,000 in inventory. We
And
just
how
told
much were
them
you purchasing the inventory at each stage? So you push that back until like January, February. And
300,000 in January, 400,000 in February. So there wasn't much time.
yeah, right. Got you.
But in the end, they decided, well, we negotiated that if we do it like this, right? We sell 300, we send them 300 in January, 400 in February, they'll take 50% off on the loan. So now there's no loan. So we paid $1 for the goodwill or for the business, and then we bought 700,000 of inventory, which we just took another loan, right? So we took a loan of 700,000 to pay a $1.5 million
5 million.
loan.
Yeah. So you just made 700.
So
Seven.
like the typical leverage the asset to pay the other.
Yeah.
They're
And
happy
where
and
did you
it's
get the
upset.
finance for the inventory?
So it was a blended of like some family money, some friends money, some money from the pajamas we sold in December, right? Maybe 300,000, because we had like almost 2 million in inventory in that business, and by now in that business we only have 700,000. So it's really seasonal, right? So we just needed like to float these 45 days, pray that Amazon doesn't come up with your bank account is not invalid or something. And we wired the money, the last money February 26th, but there was risk because the deal was we wired 300,000, and if we don't wire the other 400,000, they keep the 300,000. So it's not, nothing is free, right?
And so with these finance from friends and family, what sort of like rate of return do you give them?
2% a month.
2% a month. Okay, so you want to clear that as fast as possible by selling as many pajamas as possible in the
Yeah,
shortest possible times, and so
because
you can
there's risk, right? Like
yeah,
no one's lending at less than 18%. And this was a 2 month loan, literally asking for the money the first week of January when people are still like groggy from the vacation. And hey, can you send us 100K? And they're like, well, when I'm gonna get it back? Well, hopefully you get it back in like April, right? Beggars cannot be choosers, right? But we were buying $2 million worth of goodwill for $1, so it's worth it.
Yeah, yeah. And so where are you guys at now with this business?
So one of the brands is just break even. The other brand is making a few thousand a month, and then the other brand, the supplier takes 120 days to produce the goods. So I really increased price, lower ad spend. We had 53% net
This
margin
is it.
last
Are
month.
we're talking about the same business that you purchased for $1, and
Yeah,
when you
so
say
it
different
was four
brands, you
businesses,
mean
right?
different.
Yeah.
Okay, it's four
So
different
one
registered.
pajama brand,
Uh huh.
one bedding brand, like both of them 1.5 million revenue each, like some bottles, for like the soda stream, and then a dog poop bag brand is the one we're selling, which was like a gift. I'll get to that. But the bedding one is the bedding one and the bottle one, they neutral each other. Like this one loses a few thousand, this one makes a few thousand. We're just lowering the inventory because there was a lot. There was 400,000 of bedding supplies. The pajama brand, we had 53% net margin last month, so like about 45,000 SD, and that was a combination of lowering the ad spend, spending some money on SEO, just having more clear messaging on the website. That's the brand that we're most excited. I believe we can take it to $10 million. That's why I pushed so hard. Yeah, the pajama brand, I think we from 1.52 million revenue, we can take it to $10 million in revenue like next year once we fix the inventory issues. Because the whole demographic is any woman 50 plus in the US can buy it. So yeah, that's mainly, even if the other two brands burn to zero, this brand is already worth at least $1 million, right? So um yeah, it was hard, it's not there was a lot of people to convince, and you know especially knowing that the first acquisition was gonna shut down. You're asking for money from the same people. I mean, I personally guaranteed the loans on the first acquisition, so now I have some loans to the people that lost money in that one, few 100,000. Hopefully when we sell this one I pay them, right? um yeah, not I take a lot of risk, but I'm blessed my wife has a good job and she allows me to take the risk.
Yeah, it sounds like you love it as well. Yeah, because there might be people listening to this and whatnot, be like, "Oh, okay, that's cool. Like it can be done, but the risk tolerance is like the risk profile is higher than maybe what their appetite might be." But the cool thing about it, somebody listening, and if they're going through that thought process, they may go, "Well, it's possible to do these sorts of deals, but not at the maybe not at the amount of risk that you might be taking on, maybe with a little bit lesser and maybe paying a little bit more upfront. Maybe if you paid like a couple of hundred K versus $1, you could, have the risk decrease a little bit.
Yeah, definitely there's deals for all the sizes. There's like and I'll get to the dog poop brand story if you want, which we didn't even pay any attention to it. So after we close or during closing, because it takes like 2 months to close, right? It's like we have this brand, we'll give it to you for free as a sweetener of the deal, because of course we're still negotiating with everyone at end of December, right? Like, do we really do it?
So
Because
you only thought there was three brands in this in
initially,
that
yes, and
initially,
then
yeah,
they added a free brand, like
yeah,
here's a here's a bonus
a
bonus dog
bonus,
poop brand.
yeah.
um because what they really wanted, their profile is like a consulting p I think the incentive for them after raising the VC money was to have a clean exit for their CV and say, we tried this for 2 years, it failed, but we sold it without having to go through a bankruptcy. Because if we don't buy it, the keyword the CEO always uses certainty to close, right? If you can give certainty to a seller that no matter what you find, you will close, you will not back up, because that's a big problem, right? Like people go through like this crazy DD, and then they find some, sorry to say, like bullshit, like expense, that the seller was not aware of, right? Because like it's not everyone is very sophisticated, and then like, no, now half price, right? That's bullshit. I feel that's very, I understand because they're professional managers, but you know Like if you say you're gonna buy it and it's like something that's 5% of the revenue, it's like you buy it, right? It's not maybe you don't ask for half off. So that was his most important thing is we'll sell it to you for cheap. We'll sell it to you for cheap, but you promise us that you will close. Like you will close, right? Like, and we will do it. We'll believe in you. I mean, you have some references, not too many, but you will close no matter what you find. And we found some, some inventory loss here, some inventory loss there, like some, and we closed. It's like it's our problem now.
Okay. So that's your philosophy. If you say you're going to buy it for a certain price, you buy it for that price before DD.
Well, unless it's like a very big problem, right? You do some seller finance, but in this case, we're paying $1. So whatever happens, it's baked into. Even if we lose another 200,000 on some things we find, still worth it. But then when you're paying 3x or 3.5x and you find something bad, then you know
You want
there's
to
no room.
decrease your offer. Yeah,
Yeah,
definitely.
there's really no room. So we,
Yeah.
we always close. If we say we close, we will close. So yeah, anyway, going to the yeah, it's a business that was launched 2020. Basically, it's like organic poop bags, like not organic. How would you call it? Degradable, made with corn, sustainable poop bags. Very simple business, doing around right now 15,000 a month revenue, maybe 8,000 SD. We turn off the ads in November. It's just like 1,600 subscriptions. We lose like 20, 30 a month. Then I found out that this was sold through Empire Flippers. Like I was listing it yesterday. And my CEO said, "Hey, I found an Empire Flippers email in the email." And we found out it got sold for $370,000.
When? To the people that you bought it off.
Yeah, in February 2022.
Oh, wow. Okay.
So this
Right.
is a bonus from the $1,
Yeah.
that now we have a business generating 100,000 a year profit. Um, I mean, we don't have time to manage it. It's too small, right? I don't think we can grow it to like 1 million revenue. So for us, we will sell this business for like maybe 200 something thousand and put the money for more pajamas, right? Like,
Yeah. Just buy more stock. Yeah. Sell off some parts of the asset of that fund there, and then just add in. And this is a really good thing for people to understand that when I hear you say that is looking at assessing your opportunity cost of what assets that you have. I do this in real estate and business as well, where I'm like, okay, which asset is performing really well, and is it better to go all in, like depending on what your risk profile is as well? Do you want diversification, or do you want just want aggressive growth, and you're going to get it from this certain avenue, that one pajama brand? Why not take some funds, sell off things? And you also, what you're doing there is you're having more focus and more team attention on that one asset, and that intention and focus, like you said, it is the most important thing. And you could whittle your way down to just that one pajama brand over time, and when you've got all your focus on that, when it comes time to make an exit, you can focus on an exit for 6 to 8 months, and then you're gonna make a grand exit, and then you can go again.
yeah, so in a way, I am a firm believer. I don't operate anymore, right? I remove myself from the operations. I'm doing the CFO role, CMO here, product, when I want. And, we just make a plan. It's not too ambitious. We have a 25-year vision now. We don't want to sell. Everything is for sale, but we don't want to sell, right? So we finally achieved like some kind of stability. I think after this year, we'll have a much stronger balance sheet if we don't buy anything else, which I hope I don't. But some a deal like this
Is
comes
that
in,
is
we'll
that your
spend the
goal?
money again.
Is that your goal? Just to, as a CFO, just like let's just get stable and then build upon
Yeah, I mean, I'm doing
solid
the CEO
platform.
role, right? There's two CEOs reporting to me,
Yeah,
and then the marketing reports to me. 'Cause I'm training one of the CEOs to take over marketing, but he came from another background and he's only been in e-commerce for like what 4 months now. Um, so we're just trying to be stable and then sell assets. It's not the right time to sell, but it's just that there's focus, right? It's like there's a there was a guy that he had like an aggregator and then he sold everything and just decided to focus on the pet brand, right? So now he wakes up in the morning, it's all about the pets, the metrics of the pet brand, like how are we doing on this? Is I'm managing 20 brands, so I know what happens in all the brands. I get reports in all the brands. But right now, if I would say of my operational time, 70% is the pajama brand for older ladies because I'm running the Facebook ads, and then I have a spreadsheet that I update every day. So I know exactly how much profit we made the day before. And I'm aware of, when the samples get here, choosing the models. And I don't have to do it, but I'm learning, right? Like you're always learning. Fashion seems very interesting to me. Never go into fashion though. Like if you're a first time buyer, no apparel, no supplements, no beauty, because you really need a lot of money for those.
Yeah, for the margins. The way I think about it in terms of focus and intention on one asset is like to explain it easily to people or for them to understand it is that if you are say you're playing sports and you've got like all of these passions and you love them all and you're playing all of these sports and you want to be get good at all of them and you say you're playing 5 sports in your life, uh, you're not going to get the best there is in one of those or all of those, unless you decide to cut back on a few and work your way down till you get to one, and then you could likely become a professional in that, that department. And it's the same with business, and it's the same with life. Where if you have a lot of things going on in your life, a lot of drama, a lot of things like you just don't have capacity to think clearly. When we're under pressure and stress, sometimes people like myself have a really good survival instinct. I can get shit done, but I'm far better and far more efficient at making good and accurate decisions that help me to grow in my life when I have so much space and time. So why not treat our portfolios like that, right?
There's very few people that can have several businesses. It's also like maybe we have mental issues. I don't know.
we all
In
we
the
all got
sense
some mental issues. Each one of us has our own like mental issues, though, don't we?
that we just see opportunity and then we don't want to miss on the opportunity. I've been saying a lot, not to a lot, the last year. And unless it's really good, like we don't do it. So it's also don't push it. And then you have the other, people that have been looking to buy their own business for 3 years, right? And why don't you just buy something that's like 50,000, right? And just do it because like it's gonna take you. I've been doing this 8 years, and I'm still believe like I'm a newbie, and I'm lucky because I have a 25-year vision, and I'll be only 60 in 25 years. But I'm doing 8 years, and I've seen a lot, and I still believe I don't know anything. I'm learning so much.
I love that attitude, like just knowing that you're going to be a student and knowing you've only just getting started. And when you say when somebody might be looking for like a couple of years or even a year, buy something. Know it's going to be the first one you buy is going to be just mostly a great lesson, more so than yeah, it's not going to be it might be your home run, but typically the first one you buy is going to be the best lesson to set you up for the future acquisitions and to build the portfolio that you actually want. Just like when I bought my first property, I knew it wasn't going to be the one that was going to set me free completely. It's just a stepping stone. And I think that's a really good attitude to have, Mark. So tell us, I'd love for you to share, if you're open to, your 25-year vision.
Yeah, basically, I want businesses to live to my kids. Um, because I became a father a year ago, and my wife's pregnant again. Thanks. So that really limited my. Before that, I wanted to do more turnaround in the US, like real business. To me, this is a stepping stone to like private equity. Um, but now I'm localized in Asia. So I'm looking at businesses that here in the Philippines, e-commerce in the Philippines. Um, I just want to buy good businesses and then not sell them, right? And I think e-commerce and eventually other businesses. But yeah, it's all focused on the Philippines growing because Philippines exports people, so it's gonna be more related to that than e-commerce. And then also bring foreign brands to Asia. That's also like an interesting part. But right now, I would say, yeah, just go slow but go safe. And then if we take risks, it's mostly like by partnering with someone that doesn't want to live with their business anymore. Where our risk is only also opportunity time, right? And the headspace of the team, my headspace. And it will come once we have a bit more, traction. We're doing like 15 million revenue. If we get to 25, pajama background, grows from 2 million to 10 million, then I have a case study for other brands, right? And yeah, I think at the start, I think, yeah, I think at the start, 2019, right, when we raised some money, I mean, I had never seen so much money. The maximum amount of savings I ever had was $20,000, right? Um, my family is just middle class. My mom's a teacher. My dad's just a normal employee. So I was driving the company forward on blind conviction, on like everything was an unknown unknown. So I didn't even know the risks. Now it was more fun that way because everything is new and exciting. And now, we know like we buy it this year and no growth until next year, right? You put the people in place, you give them 6 months. So it's more structured now, like the management meetings. Like for first time buyers, I think most people have never delegated a task in their life. That's like the first, it's gonna take you a year or two just to, give a task to someone and then manage them, right? Unless you come from corporate and things like that, um, like VP level, I would say, yeah, the vision is just, keep not selling, and getting good opportunities and, having fun. And there is no set amount to retire either. If it grows, it grows. Some years will be better, some years will be worse, right? Like,
Oh, that's life, That's life, life and business. It sounds like you're working your way towards less risky acquisitions and just buying great brands that are going to stand the test of time, hand them over to your children. Um, yeah, I really like. I personally, I like that approach. I like to grow, and I feel like I've taken the riskiest risks ever had in my life, and I've already taken them. And now, as I start to get a bit older, I don't feel like I need to um, you know, and that's just personal. I don't feel like I need to go crazy aggressive. But then you got some other people, like I've got some clients that are just in different level, different game, want to play a different way. They're a different player, and all power to them. And yeah, all power to you too, Mark. I really appreciate you coming on. I want to ask one last question before you do go. Is out of all the entrepreneurs that you know, um, who do you look up to the most and why? Like an entrepreneur that you know.
I think Roman, the guy from Peak 21, he really has a vision of like D2C commerce for the next 21 years. Methap from Carta Ventures also, like he's really focused. And every time I try to get money from him to invest in my business, he's like, no, this is not good enough. You know, um, yeah, mostly in the e-commerce space.
So you said Roman.
Romania from Pick
Um,
21. I'll message you
yeah, and I'm just
the contact.
I'm wondering why though. Like the important part of the question is why do you look up to them? So why do you look up to Roman mostly?
Then he bootstrapped it with his wife. When that's already like an achievement. I tried to work with my wife, that didn't work out. And then he's been very clear on like what he wants from his life, and just keeps doing it. And there's no bullshit, right? It's just like he's genuine. And then like he also has a long-term vision. I feel once you become a father, something changes on long-term vision, and you're not chasing the quick wins because it's not gonna solve anything, right? Like, okay, you make a few 100,000. Now what, right? Like a kid is like a lot of money, and just college will be like what, a lot more money. And so it has to be built like stable growth.
Yeah, I like that. The way I think about quick wins is like sugar hits. Like when you have sugar, I'm huge into my health, but when you have sugar, you get like a quick win and burst of energy, but it's not long lasting. versus, you know, just stripping it all back and setting yourself up with like the best energy in the business and working on the best things and doing it the right way.
Yeah, and I was chasing those for the first 5 years, right?
Most people do though, right? Because that's the stage that we go through is like, I think I want to get out of the survival phase of like, I need to do these things for work and I need to make an income until you get to a point where, and I totally get it. I'm not saying it's justified. I did it, you know, but we just so hungry for like money and wins and growth. And then we realize that, you know, sometimes those paths that we went down weren't sustainable, I guess.
Yeah, there's a quote from last year. My wife just said, "If you fail to plan, you plan to fail," right? And I wasn't planning as much. I was, doing these spreadsheets, like visionary. I'm a visionary, right? I'm not an integrator. Um, and now they're more conservative in that sense. And no, the vision is still very big, but the plan to get there is more conservative. When we first modeled, we modeled that would be IPOing by 2023 with like 100 million in revenue and 20% net margins, right? And now the margins, you're lucky if you hit like 8% net margin. So, now I model 6% net margin.
Yeah, conservative.
And we're happy with that. It still
Yeah,
works.
and you still works. You can still get there, you know, and it's
Yeah.
less. You need to do less crazy stuff to do so.
And we now under promise and over deliver. Where at the start, because you don't know better, you really over promise, right? Like sales, investment, what you believe. I think my partner also said another one. People overestimate what they can do in a year, but they underestimate what they can do in 10 years.
Yeah, I've heard that one. And you know, you can put an X on that as well. You know, and a lot of people don't think that way. You know, you can put a zero in front of both those numbers. People often overestimate what they can achieve in 10 years, and grossly underestimate what they can achieve in 30 years. Most people aren't thinking about, when we first started, I wasn't thinking in 10 and 30 year blocks, right? We're not taught to because we're in a hustle. And it's a very different mindset when you start to progress from that. And that's what I want people that are listening to this podcast to. It's what's so good to get you on, Mark, is to, you know, see what you've achieved and how you've gone aggressive and started to slow down as you realize it's going to be beneficial for you and your family. So, Mark, it's been a
Yeah.
pleasure to chat. Thank you so much for
Yeah.
coming on.
Thanks for the invite.
Yeah,
Bye bye.
mate.
Hey YouTube watcher, if you thought that video was good, you should check out this video here on the 2 best types of websites beginners should buy. Or check out my playlist on how I made my first 100K from buying websites and how to do due diligence. Check it out. It's an awesome playlist. You'll enjoy it.